Right. Hi there, everybody. My name is Jack van Heerden. I'm the CEO of Wits Mining, and I'm here to talk today about our project that we're building in South Africa, and also give you a bit of insight about our Greenfields Exploration Project in Western Australia.
How are you?
No, very well, thanks, man. Yeah, it's been a good couple of days here at in Durban.
Yeah, well, it's the end of the week. You're off back up to Johannesburg soon, aren't you?
Yes, yeah. So I spent 2 days here, mainly at the one-to-one, and where we saw a couple of very interested parties. A lot of people were interested in our story, so it was a good couple of days, yeah.
So what we're here to try and promote, what we're here to try and say, and who we're here to meet?
Mainly, I think the key thing for us is to introduce our company and our share to as many people as possible. So that's why I said I had a full day of 2 full days of introducing our company to people, and then also then take it one step further, where I want to introduce it to potential investors. You know, whether it's through whatever financial instruments these guys are offering. I'm quite happy to listen. You know, so at this point in time of our project, we open to a couple of options to look at how to fund the project going forward.
Right. Okay. But by that you mean NSRs, streaming, royalty, all the kind of funky, clever stuff.
So so what we did was we appointed an advisory firm a couple of months ago called Tarum, and these guys are specifically appointed to find us debt financing for our project. We can get into the quantums now, but I think specifically finding us debt financing, and then looking at, we're not going to debt finance the whole project, so at the moment we're looking to sort of debt finance between 50 and 60%.
Right, yeah.
And then the other 40% we've got to then do through some equity instrument that's available to us, And, one of the things that we sort of do take cognizance of is the potential of further dilution of our share, So that's why we're also talking about the streaming, royalties. We just want to see what's available. And
it's just getting that balance right with these kind of quasi, structured financing packages where you're not giving away, you're not diluting or giving away too much up front versus being able to get the thing going and generating cash or revenue, right? So
exactly, yeah.
You've got to get the balance right for sure. Tell us about you. What's your background? What's your history?
I'm a mining engineer. I've been in the mining industry now for a good 25 years. Oh, it seems a bit, we're there already. But yeah, those are 25 years. I've worked in South Africa. I've worked extensively in Africa, Zimbabwe, DRC, and then also a short stint in Tanzania, So I know the sort of the African context, and I know the South African context very well.
Important.
Yeah.
Actually, really important. We've spoken to companies whose CEOs have actually never been here, but their assets are. Yeah. That's an interesting one.
Yeah. So, I've worked on all these assets in Africa. I know how the sort of most of the regulatory issues work. I've experienced it myself, So, I might not be the world's best promoter, but I understand what a project needs to sort of get that up and running,
So you're here to make it work. You're not here to talk about it.
Yeah, exactly. Yeah.
Right. And so tell us about some of the team helping you, like actually physically, operationally helping.
Yeah, we started off just myself and Simon and our chairman, and then I started building the team here in South Africa. We employed a geologist that actually started his career on the Wits Basin area, so he knows the geology there very well, Then we also employed a Tozama, which is taking care of all our sort of stakeholder engagement, our corporate affairs for us. And she's been very valuable with getting the mines department, our DMR, getting them to sort of react to progressing our mining license for us, which is in place, by the way, and then she's also doing quite a lot of work with the communities to ensure that, potential contracts that we put out for the communities, that they are in a position to tender and give us fair prices.
Right.
So she's very valuable for us. We've then employed 2 operational guys that come from the mines and come from a project environment that's going to help us to implement this now.
Small team.
Very small team, but I think we've got to take it we took a view to say, for us to survive in this fluctuating cost environment, we've got to really look at keeping our costs down, not building the team too big, because if the price goes up, yes, we all smile, but if it goes down, then it's going to be tears, So we want to avoid the tears as much as possible and keep the team together,
Right. Let's get into the projects, okay? Let's deal with the kind of outlier, which is the Aussie exploration component first. Just tell us what you're up to.
Well, at the moment, we are now finalizing the work with Rio. Just to sort of take a step back, just before the end of last year, we entered into a JV agreement with Rio. We ourselves did an aerial magnetic surveys sort of middle of last year, and we identified 8 targets, Then Rio, as our neighbor, were interested in looking at some of the data, and we made it available, and they said to us, look, they're really interested in 2 or 3 of these targets that we've identified. And then we entered into a JV agreement with them. So what's happening now is that they are managing the project for us, because they've already been set up there, through this whole COVID period. They still had people there. They understand that landscape, and so what's going to happen now is we're just finalizing off getting access onto the site, and then within the next month or so, or a couple of months, we want to start drilling there, So
was that always the plan, basically? Because you know, people talk about in the head frame and all of that. So you knew they were there, picked up some land, and you knew that you would always have that conversation. It was a case of they stumbled along and stumbled across you and said, well, actually, if we share some of this data, if it's interesting, we'll work with you. I mean, what was the plan?
Well, the plan was always to firstly identify if there's something,
Right.
And now that
to do it yourselves.
Yeah, so we always said, look, we wanted to do it ourselves. There's an opportunity for us to sort of add an extra project into our portfolio, and but then when we find this and we realize that Rio is the big brother in the area, it almost made sense to go with them,
Yeah, for sure. Nice balance sheet. Yeah. So tell us in terms of the deal, you're free carry on this whole thing through to what point?
Yeah, so at the moment, they would be investing about 4 million Aussie, up to about 4 million, and for that they would get about 51% of the project.
That's phase 1.
Yeah,
investment.
phase 1.
Okay. Over what period?
That's over, I must go and check, but probably about over 2 or 3 years.
Right. Okay.
So it's in the near future, But specifically for this year, they've committed to drill 800 meters or so, and that's really exploratory. There's a couple of meters per target, just to understand what we've got there.
Yeah.
And then spend the 4 million, and then after that, then phase 2 kicks in, where then they can then spend up to 6 million.
Okay.
And that will then sort of take them up to about 80%, 79% shareholding. Yeah.
Okay, so and you're free carried the whole way through all of this.
Yes.
And obviously they can exit at any point, right? It's exploratory by nature. That of course they can. So what have they got going on their properties?
Well, they've got right next door to us. They've got a massive exploration going. I believe that they have indicated that they want to start, I think, a mining operation in the near future as well. I'm not 100% sure of what they are actually planning there.
Right. Okay.
Yeah.
So back to what they're doing with you. So how long is phase 2?
Phase 2 is also about 2 or 3 years.
2 or 3 years. So in the next sort of 4 to 6 years, they may be in a position where they either take your 20% out, presumably, or you have to start contributing capital to advancing that project in some way, shape, or form.
Correct.
Okay.
Yeah.
Okay. So that's a nice one. I would say to people, like, getting a Rio or a tier 1 or a mid cap, or whatever, working with is great. There's no guarantees.
Yeah.
But at the end of it, if they hand it back to you, you've got a whole bunch of data which you haven't had to pay for. Quite nice.
Yeah. No, absolutely.
Right.
So and I think we always took a view to say, whether we spend the 10 million, the proverbial $10 million, or they spend it, it's got to be spent somewhere. In this case, it's probably easier for them to spend it than for us, as a small cap company, to sort of establish ourselves there and go and drill it.
Absolutely.
So
I'll say, let's get back to Africa.
Okay.
You're from Africa. You're based in Africa. Yeah, right. So tell us about the core project, Flagship project.
So we've got a very exciting project here to the west of Joburg CBD. That project has been mined in the past, or at least there's been mining in the vicinity of that area. So what we're doing is we refurbishing an old shaft, which we've done now successfully. And then the aim is that our project will take us to a big virgin block, sort of to the east of the shaft. So a lot of mining has been taken place in the area. So we know the gold is there. A big company, DRD.
Yeah, we know them.
Yeah, was involved there. They're still a shareholder with us. I think they rather 3, 4, 5% shareholder with us. So we've refurbished the shaft, and now our intention is to develop to this big virgin block. So I think we've got to differentiate ourselves. We're not going in, opening up an old mine and going to do pillar robbing or something like that, or just do sweepings. We're actually going to start a brand new mine, brand new mine infrastructure. We're just utilizing the old shaft, but we're going to start brand new vent shafts, all those type of things.
So tell us what you know about that area, that deposit. What information have you got today? I know you've got the shaft, but what leads you to believe that it could be successful?
Well, we managed to get, a lot of old geological information, and production information.
From DRD?
From DRD,
Okay.
And the company, Shango Consulting, has helped us to develop a new resource, based on the old information.
Right. What's that look like? How much? How big?
Sorry?
You say they've helped you put a resource together.
So we've got, on that Kimberley's where we want to start, we've got about 3 million ounces in resource, which I think is significant.
What grade are we talking about?
We're talking about, say, 3.5 gram a ton, for our in-situ grade.
Yeah.
But our overall resource is about 4.2 million ounces, which is a significant one, because that's if you include the bird reef and the main reef. There's sort of 3 packages of reefs that's in our area. The Kimberley's in front, that's going to be our main target. Then the bird reef, and then the main reef.
Right.
So the main reef is significantly higher in grade, and it's and that's been mined a lot in the past. But we've identified some areas that we can go back in and start mining. So that's why it's part of our resource, and the same with the bird reef. The bird reef is typically a bit lower in grade. We're talking there sort of 2.8, 3.2 gram a ton, So it's you've got to see it in context where maybe 20, 30 years ago, 2.5, 3.5 gram a ton was low grade stuff, where, the old timers used to mine anything less than 8, they left, So we've got that opportunity to go back.
But you haven't got the capital expenditure on a big infrastructure build component. Like the shaft would have been what if you had to build that yourself?
Oh, yeah, that's massively capital intensive, and we don't have that now. So our focus is now on the Kimberley's. We're utilizing that old shaft. We're going to develop a decline down to that block of ground.
Yeah,
and then we'll start utilizing a typical mining method like they've done in South Africa for the last 100 years, a breast mining method. You'll raise up and then you mine east to west. So and that's something that the people, at least in South Africa and in that area, is familiar with. So it's not a brand new mining method that we trying to deploy there. We'll utilize something that everybody is known with.
So tell me what you've done. Obviously, DRD have had over a bunch of information. You've obviously gone through a process of assessing this yourselves, putting economics on it. And it suggests that you can go forward with this. So can you give us some of the numbers around the economics and perhaps where you are with capital today and what you're going to need going forward?
So if we take a small step back, we decided that we've got to get this project up and running to show to people that we're the new kids on the block. We're starting the project, So we raised a bit of money in about 7 or 8 million in December. And we utilized that money to start the refurbishment of the decline, the refurbishment of the box cut, putting in site infrastructure like change houses, offices, generators, and then a water supply system for us. So we are now in a position where we're ready to go. But then last year, September, we also completed our feasibility study. It was done by a company, Barra Consulting. They're a small sort of boutique engineering firm, but why we chose them is that they've got information, or they can benchmark our project against Harmony and Sibanya that's also sort of in the vicinity, so that we don't use crazy numbers and then, they've got a good benchmark, So we use them. And then they came out with a feasibility study, and we were very encouraged about it. It showed that our all-in sustaining cost would be about $11.40 per ounce, which I think is very competitive. And because we've got a sort of just at phase one, we've got a 17-year life of mine. If you sort of look at the steady state all-in sustaining cost, it drops down to about $30 per ounce. So we've got a robust phase one project that we've got, and the capital is relatively low, at 50 million US that we require, and and that's something that that the bulk of the capital will go towards mining equipment, paying the contractor to do the physical mining for us, and then a bit of extra surface infrastructure,
Okay, so and I guess there's ways of, that's his job over there. There's ways of actually getting that 50 million financed as well, correct, right? Okay. So what's the expected annual production?
We want to ramp up to about 50,000 ounces per annum on phase one. Yeah. And then, like I mentioned earlier, we've got the Bird Reef and the Main Reef. Yeah. And then what we call a Kala Deeps project. If we incorporate all of them, we've done a scoping study to show that, yes, if we bring in everything together, we can go up to about 70,000 ounces per annum. Okay. Yeah. So there is a bit of an uplift. Yeah. But one of the exciting projects that we are looking at is what we have coined, you have to coin a project. We've coined Project 200, and that's specifically.
I like it. Tell us about Project 200. Yeah. What's that mean?
So what we said was we've got the ambition. Yeah. To see if you condense that whole ore body, because currently our scoping study indicated we've got a 25-year life of mine. So if you condense everything, you spend a bit more capital. Everybody has got this view that the gold price is going to go up. You spend a bit more capital and infrastructure, looking at the possibility of putting a plant. We can chat about the plant now. So you do all those type of things and you condense that ore body. We believe that we can get it up to 200,000 ounces per annum. So,
but let's start with today though. Low capex in a gold environment, which is pretty darn good. 1140 AISC. Don't know what the all-in cost will be, but you'll be throwing off cash at that point to allow you to build out phase 2, phase 3 in a more modest and respectable, less dilutory manner.
Correct. Okay, because we'll be generating cash flow. A lot of the sort of the upfront studies, the upfront establishment we can do with our cash flow. So we want to build it up. We've got and that's why our phase one is really, it's not a proof of concept because we are aggressively mining now, or we want to get aggressively mining. Right. But the other ones will follow as soon as possible, and it's going to make a lot easier because then we've already got established, we've got an operating team established, so to then reopen those other shafts is easy,
Okay, so 50 million, ramping up to 50,000 ounces, margins, in today's price, should allow you easily to get the debt in place that you want, presumably. Yes. One would have thought. And it's really then a question, as you said right at the beginning, which is the kind of structure and the nature of the equity component, if indeed there's pure equity or derivative semi-equity product, whatever that looks like. So that's kind of really interesting approach. But what leads you to believe, because you're kind of rushing through the process, you're ambitious, aggressive, Project 200, all of that. What leads you to believe that this will go without a hitch? Because the time frame to getting into production presumably is shorter than most. Partially because DRD have already been there and there's a history in the area, but you got to be careful as well, don't you? So what risk mitigation are you taking?
Look, at the moment, we are very sort of aware that cash preservation, especially in the startup phase, is critical for us, And one of the things that we've decided to do right now is that yes, we installed all the infrastructure, but then we said, okay, while we're waiting for our offtake agreement to fall in place, or a toll treating arrangement that we busy putting in place, while we're waiting for that to be formalized, we've just sort of put the mine on sort of a refurbishment. We're re-looking at the equipment suppliers. We're re-looking at our mining contractor, or the form of contract that we've got. So we're preserving our immediate cash.
That'll eventually happen.
Yeah,
right. But just in terms of this competitive tension, in terms of pricing, are there lots of options for tolling for you, or is it just 1 mil in the district? And
no, there is a bit of. I would have liked a bit more, but we've got the major players around us,
right?
And we've been talking to them, So I think that our next step is now to sort of we've sent all our data to them to see what they will be getting and what they will be treating.
Right. Okay.
And it's really now, I think, for them to sort of come back to us and then.
So what do you know in terms of helping them out? In terms of I don't know how many have got ore sorters or how many conventional, and I don't know what the competition. What the options are for you there. But what work have you done in terms of whether it be network or other? To help them. Yeah. So what have you provided them with?
Well, a lot of information that, as we developed the mine now, we took samples on the face. The face is exposed, so we could give them recent samples.
Right.
Also during the feasibility phase, last year we had a drilling campaign where we drilled about 2,500 meters.
Yeah.
We used some of that core, and we made available that test results, and as part of our feasibility study, we also did some sampling there, So there's a lot of information that we've gathered that they can make up, or that they know what to expect. Right. And then also in the past, we were operating a small little open pit on the Kimberleys, which we treated with Sabanya's Isolweni plant. Yeah. So they've got that information there.
Okay.
And then also we know that Doornkop, which is a Harmony operation, right next door to, say, about 10 kilometers to the west, they are also mining the Kimberley Reef exactly like us.
Okay.
So they've got a lot of
fairly homogenous in the sense that it should be the same. Yeah. What I'm trying to get at is you're mining, you're supplying it, presumably they're blending it, and they've got to work out what the recovery rates are like and the nature of the ore body. So it's going to be harder and more abrasive on their equipment than others, and all of that kind of stuff. But at the end of the day, is there anything in there which would lead you to believe that you won't hit your 50,000 ounce target that you're going for in phase one?
Yeah, no, there's nothing that we can foresee now that's going to stop us.
Right.
So they've indicated, or we know from, I think, press releases and stuff, that there might be spare capacity in those plants.
Right.
So and we're sending them hard rock in situ material. Where I think some of the other plants to stay alive have been treating old rock dumps or treating slimes or something like that. But, we've got the real hard rock in situ material that we can send them.
Okay. So where are we timing-wise? I need to understand. Yeah. It's aggressive. You got big growth plans in the future. Yeah. But today, for phase one, where are we with regards to timing? Yeah. When do you start cash flowing? Yeah. And when do you reach, your target of 50,000 ounces?
So as I said, once we've got this tolling arrangement resolved, then it's a very quick process. It's probably about 3 months. Then we get back into production. Because we've got the phases established. And then we've got a build up to about 20,000 tons a month, or where we, and that's going to take us about 20 months, to get there, and then probably another sort of 15 months to get to 50,000 tons a month.
Okay, so reasonable ramp up.
Yeah, so it's but because we have to establish a brand new underground operation, really. 3.5 years is sort of the benchmark in South Africa, and that's what our feasibility study have shown. So we're not crazy aggressive,
Right.
We moderate, but we're also not taking it slow, if I can put it like that.
Right. Okay. So, given what you're doing over in in Australia, right, with Rio, great. Given what you see in front of you here today, do you think you've got enough on your plate, or have you got ambition to look elsewhere in Africa? Because it seems to be deals around if you can sort out your financing, if you kind of got the ability to attract financing in.
Well, definitely we want to grow the company, but I think for us as a management team, we need to sort of firstly create that credibility almost, that yes, we've got a project, we are executing it successfully, we've got the right people in place, and then we can look at other opportunities. So we have been sort of kicking the proverbial tires and looking at other projects, but our focus is now 100% on the Joburg project.
There's enough to be had.
There's enough now for the next couple of months to get that up and running, to be successful there. And then, time will tell what's available for us. But then, as we say, we're generating cash flow, so to attract debt or to attract anybody, to help us look at fund a feasibility study for another project, that's going to be a lot easier.
So tell me a little bit about the share register at the moment of construction. Obviously, you mentioned 5% DRD, great. Management hold what?
Yeah, I think it's not too much. I must quickly think. But all the our chairman, he's got probably about sort of 40 million shares thereabouts. I myself have got about 8 million shares. So we've got I would say a significant holding at the moment. We're looking to roll out sort of to some of the key employees also a share scheme. So eventually that everybody has got a buy-in there.
Right. And what's the retail construction? There's a lot of retail at the moment.
Yeah, at the moment there's a lot of retail in there. We've got one sort of cornerstone investor, Wingfield Capital out of the US, and they are on about 11 or 12%.
Right.
And so with them and DRD there, we've got sort of 15% tied up. And then the rest is basically retail.
Right, and I guess as you get into production, more institution will come in.
Well, that's idea, what right? And I think that's part of the reason why I'm here this week at the Indaba, is to try and attract more institutions, because we, and we could clearly see that in our share price really is as soon as we start announcing that we've got the mining right, we've got the feasibility study, the retail guys, I won't say the excitement is gone, but that's sort of the message we got, is that we're not going to announce new borehole results that's going to shoot the lights out or anything. We're now sort of preparing ourselves for
But do you think that will come in? Like, obviously, Oz will give a bit of an exploration story. It depends on what Rio do, right? Yeah. But again, it's super early stages. Do you feel that because you kind of got these three reefs going on there, that the exploration component, the blue sky bit of the story in Africa, it just isn't there, or will you allocate at some point exploration budget to sort of see if there is more to be had? Well,
there's definitely more to be had, but I think that's going to be more converting our current mining right area, converting more from our inferred to our indicated.
So a lot of infill.
So infill drilling.
Right.
So I think our project that we've got there now in our mining right area, we understand that area very well, in terms of the geology.
Right.
So I think in terms of sort of exciting geological announcements coming out, that's not really going to happen, But
you will look to take, so that the 4.2 million ounces is a resource, right? So you'd be looking to try and bring as much of that inferred into indicated. That's really the kind of focus.
Correct.
Okay.
Yeah, from an exploration point of view, we've got an area that we've identified for a new exploration area that we can add to our 4.2.
Right.
We've applied for that exploration area, and we're now working with the department to get it approved. Once that's approved, we already have a very good idea of what's there, and then we can incorporate that into our mining.
Right. I guess, and you're saying that, again, near-term catalyst, there's more benefit to be had, so in terms of cash flow, is building your own facilities.
Correct, yeah.
Right, okay. And those would be, what's a plant of that size cost? What size would you kind of aim for?
We haven't done the detailed design work yet, but I estimate we'll probably look in the sort of $50 to $80 million, sort of mark,
Okay.
for that.
Which, how much is that going to be able to process? Everything that you
Well,
design?
that's part of that Project 200 study that we want to do. So we want to identify what's the real potential of the block, and then size the plant to that.
Brilliant.
Yeah.
Hey, well, thanks for introducing the story. That was a really cool story. I was sort of aware of it, but I hadn't kind of really got into the details. So thank goodness you were here. And we will follow you with great interest. But stay in touch. Let us know how you're getting on, certainly around the kind of the financing and how you're looking to structure that one. But nice tidy little project.
Okay. No, great, man. Thank you very much. Yeah, it's going to be fun to get it up and running at last, So we're all excited to see it happening.
Good.
Yeah.